Have you heard of the Hilbert transform? It's an advanced mathematical tool that some traders use to identify hidden market cycles. Today, I'm going to explain how the Hilbert transform oscillator can help you detect key reversal points in price, anticipate moves, and take better advantage of market cycles. If you've never worked with this indicator, stick around because I'll show you everything you need to know. First, what is the Hilbert transform? Basically, it is a technique that helps identify the phase and frequency of a cycle in a data series, such as market prices. The Hilbert transform oscillator takes this technique and applies it to technical analysis to detect market cycles, especially points where price could reverse. The oscillator focuses on finding peaks and valleys in price cycles. When the cycle is at its peak or trough, the oscillator will show it to you clearly, which gives you clues about a possible trend reversal. This indicator was found by searching TradingView for Hilbert Transformer Indicator by J. Ehlers by user VSOV. The Hilbert Transform oscillator consists of two lines, green and red. Each has an important function to identify market cycles and possible reversals. The green line, called the real component, represents the current price momentum. If the green line is rising, it means that the market has upward momentum. If it is going down, the momentum is bearish. On the other hand, the red line, or imaginary component, is slightly out of phase and shows changes in the phase of the market cycle. This line helps to identify when the cycle is at its peak or trough, suggesting a possible change in trend. The most important point occurs when the two lines cross. If the green line crosses above the red line, this indicates a possible bearish signal and may be a good time to sell. If the red line crosses above the green line, this indicates a bullish signal, suggesting that the market may be reversing to the upside. Also, if the oscillator is at a very high or very low phase, such as at the extremes of the cycle, you could be seeing an exhaustion point, which means that the trend is losing strength and a reversal could be near. The Hilbert transform oscillator is a good tool on its own, but for best results, it is advisable to use it in combination with other indicators. For example, you can combine it with a 200-period moving average to confirm the direction of the trend, or with a volume indicator to make sure that the movement is supported. In this way, you can filter out false signals and ensure that the cycle you are looking at has sufficient support to trade. The Hilbert transform oscillator works best in cyclical or ranging markets, where prices tend to move in clear waves. However, be careful in markets with very strong trends, where this oscillator could generate false signals due to the lack of clear cycles. In summary, the Hilbert transform oscillator can be useful for detecting cycles and turning points in the market. Although it requires some experience and mathematical knowledge of the Hilbert transform, when used in conjunction